Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that answers and helps you understand the truest buzz on the D Street. As we've entered 2026, the big question investors want to know is that where should they park their hard-earned money and where will money be made? Remember, in the year gone by in 2025, it's been the bullion, the gold and silver, asset classes that have outperformed by a huge margin, outperforming every other asset class that is there, be it equities, be it debt, be it real estate, even cryptos for that matter. Now the big question is, can this record run of gold and silver continue in 2026, or should you be now a bit cautious there? That's something that we are going to be discussing on this special edition. Let's actually welcome our guest on board, Mr. Kunal Shah, the head of commodity research at Nirmal Bank, is now joining in to help us with all of that. Warm welcome to you, Kunalji, and good to have you with us in the new year. Season's greetings for this new 2026 year for you, for your loved ones, and everybody at Nirmal Bank as well. Well, give us a first sense of what is it that you are seeing in gold and silver that others may not be seeing at this point in time. We've already celebrated 180% of returns in silver. That was beyond anybody's imagination in a single year. We've also seen whopping returns of near 80% in gold as well. As we've entered 2026, both these commodities have been a slight cautiousness is being seen in their prices right at the start of the new year. How are you assessing what's coming in forward from here?
Okay, so first of all, very happy New Year to you and all our viewers. I hope that this is going to be prosperous and healthy New Year for everyone. Now, coming to the question, what you are asking, the return, gold and silver and commodities broadly. So now, this is not an event. I mean, this is one-off event. We have not seen this kind of returns. But in order to understand why this kind of returns, first, you must understand the macro theme where we are in right now. The macro theme is we are delinking from globalization to multipolar world. Okay, and in this multipolar world, what is happening is everyone knows that the paper currencies are losing its value so fast, especially the developed world's paper currency, that there is a fear that what if dollar may collapse by 10, 15, 20% over a period of next 1.5, 2 years. So in order to protect themselves against this kind of humongous debt by central banks and also the fear of crash of US dollar, this is bringing everyone is chasing to own hard assets. That is the theme which is being going on. So forget about copper, gold, silver, everyone wants to have a pie of it. And in that, we are seeing the production was stagnant from last 4-5 years, the deficits were growing, and now we've come to a point where there are actual actions by China, Russia, that they are planning to put an export control on these commodities. So the fundamentals are obviously very bullish. Okay, a lot of these factors which I discuss on your show right now, they are already priced in. So whenever you see dip, correction, whatever terminology if you want to put, at that time commodities, gold and silver are buy. The return expectation should be tapered down. The allocation at this level, if you say silver at this level, you can you have to reduce your exposure instead of increasing it. The return expectation from here would be minute. I mean, 15 to 20%. That is the expectation, I think, in case of silver, and 10 to 15% in case of gold. That is the realistic target for 2026. But one will remain in commodities. One will remain in hard assets, and the hard asset trade during the year 2026, at least in the first half, will continue.
We have a Goldman Sachs report that just came in and yesterday, in fact, and they have mentioned that gold continues to be their top trade for 2026 and how they believe that there could be a target of $4,900 per ounce that could be seen on gold by December of 2026 as well. Although for oil, they do see oversupply risk and they see Brent averaging around $56 a barrel. They also do see that copper consolidation could continue at around $11,400 per ton. And they're also looking at how battery metals, lithium, nickel, could be hit by the Chinese supply surge as well. But the single favorite long commodity remains to be gold, and they also see that central banks are expected to buy 70 tons per month even in 2026. So the central bank buying could also continue as well. So looking at all of this, how would you advise somebody who has not yet participated in gold in the sharp run up that we saw in 2025? What should they expect and what should they do?
So I think the central banks across the world are in a big fix because the debt of the Western developed world is continuously soaring, and because of this kind of humongous debt you have, there are no alternative for central banks to reinvest their surplus and their reserves into gold, because I don't think so central banks are going to invest in the cryptocurrency. So the only option which is left for the safety, for hedging themselves up whenever there is a crisis, they need to have more and more gold. Okay, that is the only way out, and that's the reason why even at $4,000, even at $4,200, even at $4,300, central banks are seen buying gold. Okay, so this year's rally was predominantly mainly due to ETF, but even in spite of the ETF, we've seen, I think by the end of the year, numbers have not come, but 800 to 850 tons of gold buying by central banks is quite a big amount. And I don't see any of them coming out right now, and they may increase their allocation, but I believe for next 1 or 2 years, I don't think so that central banks will sell gold. They will no choice but to buy gold. So I am of the view that because the gold silver ratio has come down from 100 to 55 right now, the risk reward ratio is skewed towards gold more. So I am more bullish on gold than silver at this rate. And oil, I have a contrary view. I am bullish on oil also. I believe that the US Permian Basin is exhausting, and the US oil production will go down. The demand growth for the year 2024 was 1 million barrel. In 2025 also it was 1 million barrel. So everywhere there is an electric transition going on, and in spite of that we are able to generate 1% demand growth. And the supply side, if the US if oil prices remain longer at $55 per barrel, I think the supply is going to be facing stiff resistance. So I'm of the view that supply side may respond going forward if price continues to hover around these levels, and China, US will start building their reserves at this price. That is bullish. And third most important reason, that any geopolitical conflict, I mean, there are talks about US and Iran, again Israel and Iran entering. So this kind of scenario can also put an upside in oil. So oil, I'm bullish, can see $65, $70 during the year 2026. And gold, my target is at 4650, 4700. Those are the realistic and slightly conservative target for gold.
Okay, let's have a target even for the domestic markets. It is easier for a lot of our viewers to understand that way as well. For domestic markets, gold and silver, by the end of this year, 2026, what do you expect?
I think when I take $4,700, that means around 10% upside from here. And in India right now, it is trading at 1,36,000. So it can shot up to around 155, 152, 155 kind of levels in India.
Okay.
And as far as crude is concerned, crude can go up and test levels of 5,800 to 5,900 rupees on Indian exchanges.
And what about silver?
Silver, if I consider 15 to 20% upside, that should come down to roughly around 2 lakh 60,000 kind of level to 65,000 kind of level.
Okay, so 1.5 lakh rupees per 10 grams for gold and 2 lakh 60,000 rupees per kilogram for silver is what's the expectation as far as gold and silver are concerned by the end of the year. What are the chances, Kunal? There's everybody who's talking about that a big crash could be coming in gold and silver. What are the chances that you see of a big crash or a bubble-like situation having emerged? What could point out to a factor like that? Are there any factors that are pointing out to any kind of a crash emerging?
Okay, so I would say for crash to happen, we need some idea that the dollar is going to strengthen significantly, or there is a concrete plan that US is going to reduce their debt drastically. Something like that, would lead to some crash in gold, or some of the largest holders of the gold, some central banks, some countries are facing some very difficult time or difficult period when the central banks comes and start selling gold. That these are the scenario, or the Russia Ukraine peace talks materializing into full ceasefire can lead to $150 of correction. So these are the probabilities. See, even without any reason, if gold prices goes down by $100 to $200, one should not be surprised.
Okay.
Because without any meaningful reason, we have seen gold rallying the way it did in last 1 month. Okay, it was quite a parabolic move from $4,100 to $4,550. So I would say there are no reasons. We need not find reasons. And if there is a correction, so if you're buying, keep a space to average out or to buy more when it goes down. So don't buy everything at one stretch. Wait for the correction, and you can add more, but lower your return expectation. Just tell yourself that you're not going to make 70% return in gold from the year 2026. Even 15% return would be very healthy return. That should be your expectation, and the fundamental will still continues to remain positive. So dips, you have to average it out, and yes, there are possibilities of correction and profit taking at this rate, and that too can come without any reason.
Okay. Let me also ask you, since you are saying that the better idea will be to use the dips to add on rather than buying gold and silver at a stretch, what are the ideal levels that you're looking at where some small corrections can happen, and those are the right places that investors should keep an eye out on to buy and to average out their positions?
I think in gold, I would say 4,200, 4,200, 4,150 maximum. Silver, I would say 55 to $60. $60 can come in a touch and go, but those will be the level where I would recommend to add more.
Any Indian levels that you can share for the same as well?
In India, this should translate into 242. So if I consider that it can come to around 2,05,000 to 10,000, those kind of level would be better to enter.
And for gold?
And gold, I would say 4,200. So that comes to 5% around. So I would say 120, 25 good levels to re-enter.
Okay, got that. So around 1,20,000, 1,25,000, whenever you see these levels, viewers, that's where Kunal advises. It could be for a brief moment, but those will be the good levels to average out your position in gold. Similarly, for silver also, there could be slight dips that you could be seeing at around 1.2, you're saying, right? 1.2 and 1.3 lakh rupees per kilogram. So, slight dips of about 10,000 rupees odd is what you could expect from where we are at, and there is what you could be looking at averaging out your position as well. Let me also discuss with you, since gold and silver dominated the theme in 2025, do you see there could be a case for the base metals to rule 2026? At the fag end of 2025, we saw some of this precious metals rally also trickle into copper, for instance. Is it going to be a year when we would see copper, aluminium, other metals also come into fair momentum kind of a space, and therefore is it important for investors to add a lot of those metals also in the portfolios?
I believe that metals are in a structural bull run. So, copper is a new gold for the year 2026. That's the article I penned 1.5 months back, and I continue to believe that. The concentrate size of this side of this metal is pretty weak from last 3 years. No incremental addition in the capacity and the supply. The demands from the BRICS economy is pretty strong. And now the biggest reason which has come is the smelting capacity from China is going to be curtailed. So weak ore production, one side, 10% 10% cut down in the smelting capacity. So I think this is a perfect storm for copper to move up, and that's why it has rallied. I think copper is heading towards 1400, 1450 levels on MCX. LME it is heading towards 14,000 to $14,500 per metric ton. And I believe that China cutting down its excess capacity is very bullish for the base metal.
Okay. Let me also ask you one more thing. Say, for instance, there are many people who were always in a state of FOMO and could not get an early entry into gold and silver or in these metals. For those, do you say that, they have missed out the kind of options that there were? Or for those who have a long-term view, can they continue to invest, and what will be the best form that you would advise to take a fair share of gold and silver in their portfolios?
I think there is a bit of FOMO and there is a consensus that gold and silver can never go down. Okay, both things are very dangerous. So, like I said, without any correction, without any reason, also prices can correct. The better form of investment would be for retail investors, ETF market. For traders, I think MCX is a good choice. But I think one must be prepared that there can be correction. Okay, if you don't want to enter into FOMO, then the thing what you do is just to be in it, you can buy small quantity, wait for the dip, and then you can add it again.
Okay, fair point. So that's the strategy that you must adopt, viewers. Let me also ask you on the ETFs specifically. Suddenly, ETFs has become now, a word that everybody has used and found out and understood in the year 2025, especially when it comes to gold and silver ETFs. Usually, up until now, it used to be either the physical forms of gold and silver that people would have, or maybe mutual funds way of investing in gold and silver. 2025 was one year when we actually saw both gold and silver ETFs also starting to pick up pace among investors. And we've seen that in the data that has been showing us. What is it that one should understand from ETFs? Is it still the best way to invest in gold and silver with?
Obviously, for a retail investor, this is the best way to invest. Even for the HNI gold and silver ETF, provide tremendous opportunity. I think there is no better way to invest in gold and silver for the financial market participant than ETF. So ETF is the most preferred way. In India, the penetration of these ETFs is going very strong right now, and expected to even grow further. As and when we enter in a scenario where more and more people are drawing and allocating their portfolio, there are a lot of people who still doesn't have any gold in their portfolio. So there's a huge opportunity even at these levels. A lot of lately we've seen Indian government announcing that pension funds will be allowed to invest in gold. So these are the new demand. The financialization of commodities taking place. So I believe that more and more people are going to come, and gold and silver ETFs are definitely going to do very well going forward.
Okay, fair point. All right, Kunal, then thank you so much for being with us on the show and helping our viewers really understand how they be approaching the winning asset classes of 2025 gold and silver. Thank you so much for your time. All right, viewers, we'll also focus on some of the key stock ideas that you should be really watching out for today. Look at what is happening in the markets. We are inching up. We are 100 points higher just within the first hour of operations in the markets today, 26,251. What's moving in trade today is clearly the real estate pack, the auto pack, metals pack, financial services. These are the stock sectors that are actually pulling up in trade. Real estate index is up by 1%, and there are some other gains also coming in. Barring just FMCG, rest all of the sectors are actually up and about in trade today. Let's also look at the top winners and the laggards as far as the Nifty is concerned. Today it's Coal India, Bharat Electronics, NTPC, Hindalco, Bajaj Finances, all the stocks that are actually buzzing in trade, 1.5 to 2% higher kind of moves can be seen here. ITC, however, is down by 3.3% today, the top laggard in trade on the Nifty. Bajaj Auto is slipping, Dr. Reddy's, Shriram Finance, Titan, these are all the stocks that are still declining in trade. Let me also highlight for you what exactly is happening with ITC. Why is it the top laggard today? Why after yesterday again there is a sharp sell-off that continues on the stock? The stock is now hovering at 352 levels. What has triggered the sell-off truly, viewers, is that the government has hiked the cigarette excise duty starting January 1st of 2026. Now, the magnitude of tax hike is higher than expected, and that is what is really causing the crash. There was always an expectation that the excise duty hike will come in, but the kind of quantum that has come in is higher than expectations. Now, this has raised some concerns about the volumes growth, the earnings and the valuations. The stock, remember, fell 10% yesterday, another 3% in trade today as well. Now, post this hike, there are brokerage houses that have downgraded ITC share. There is a downgrade from Nomura, which has reduced rating on ITC, a target price of 340. Morgan Stanley has an equal weight rating on ITC, a target price of 366, slightly higher than where we are at. Jefferies has a hold rating, a target price of 400, about 50 rupees higher from where we are at. Motilal Oswal has a neutral rating, a 400 rupee target. JP Morgan has a neutral rating, a 375 rupees target. UBS has a buy rating with a 430 target. But why are brokerages really turning cautious now? They believe that ITC may need to hike the cigarette prices by either 25 to 35% to protect the margins and to continue to protect their realizations as well. The sharp tax hike could actually hit cigarette volumes is what they believe. The risk of return of illicit cigarette trade also comes in. There's also lower earnings visibility for FY27 to FY28 now. They're also looking at how Nomura particularly says the cigarette volumes could be down 15% in FY27. Also, the segment EBIT could be slipping by 17%. They have cut the EPS estimates by about 18% for FY27 to FY28. Nuvama has cut the EBITDA expectations for FY27 to FY28 by 7%. Cigarette valuation multiple has now been cut to 17 times, and that's why the stock is clearly in focus today. So I hope that you've now got to know what exactly is taking place as far as the true buzz on D Street is right now. Of course, stay tuned with us throughout the course of the day. We will continue to get you more market insights, and at 12 noon we'll answer all your stock queries on Daily Call. Stay tuned for that.